This week's economic calendar is bookended with two major events, starting with the Fed meeting on Tuesday, the last of this year, and concluding with the report on consumer inflation on Friday. Before I touch on this week's economic data releases, however, I'd like to take a quick look back at last week's most important report, the November employment data. What we saw was the U.S. economy produced slightly less than 100,000 jobs last month, most of which were concentrated in the private sector, in the service sector in particular, also somewhat so in government hiring. The goods sector continued to shed jobs. As far as the week ahead is concerned, pending home sales were already released this week. We saw that they were down 17% on a year-on-year basis. The real start to the economic data docket, however, will be the Fed meeting on Tuesday afternoon. It's broadly anticipated that the Fed will cut the Fed funds rate by 25 basis points and the discount window rate by 50 basis points. This is a rare move on the part of policymakers. The penalty rate at the discount window will now be only 25 basis points compared to an historical average of 100 basis points. In addition, we expect the Fed to hint that they will be further reducing interest rates in 2008. In the other data released this week, there will be a continuing theme of the rise in energy prices, which we experienced in the month of November. Oil and gasoline prices were up 10% in the month, and natural gas prices were up 5%. This will be manifested in the import price data, which is out on Wednesday. We're looking for a 1.3% increase there. It will also show up in the producer price index and consumer price index, which are released on Thursday and Friday, respectively. This means we're looking at headline increases in those series of about 0.7 or 0.6%. In the core inflation data, we should see only tame increases of about a tenth. As far as the CPI is concerned, core inflation is now running at about 2.1% on a year-on-year basis. The final piece of data I'd like to mention is the retail sales data reported on Thursday. This will be a key indicator of how the holiday shopping season is starting to take off. We're looking for a fairly weak reading. This series is being weighed on by a couple of factors. Number one, the housing market slump. Two, high energy prices, which I already mentioned. And three, the ongoing slide in consumer sentiment. Consumer sentiment is now down over 22 points from the start of the year. The FOMC meeting this week is sure to be the most important economic event of the week. However, economic forecasters are already looking forward to 2008, which they expect weak economic performance and further Fed rate cuts.